Good morning, it's Adil Fazal here, market analyst for CFDs.com, leading spread betting and CFD brokerage. Be sure to visit the website www.cfds.com and certainly learn more about the products and services on offer. Also visit the educational side, which I constantly update with charts and analysis, etc., for you to cross-reference with formations, etc., at www.cfds.education. Okay, this is a morning market wrap-up of the FTSE 100. So let's see exactly where this market stands. Okay, and let's see exactly where the fundamentals lie as well. Okay, so Asian markets overnight, Nikkei obviously higher 1.6%, took the lead from the US markets on Friday, given the fact that the NFP has pushed back interest rate expectations, although the Fed still seems intent on raising regardless, given the comments, etc. But we'll see, given the fact that we have several central banks on tap, obviously, this week. So we'll see exactly how the market unfolds. Given the fact that Asian markets, or should we say China, is obviously off on holiday, the Nikkei was certainly higher overnight. And that was obviously given the fact that obviously the NFP data pushed back interest rate expectations. With regards to economic data this morning, we've had weak data overall. The only exception being France, PMI data slightly better than expected. Italy, Germany, France, Europe as well. Centix data certainly weak. So overall sentiment weak. UK data certainly weak. Okay, we had inflation data overnight in Australia. Not really much of a concern in terms of the FTSE itself, other than the fact that it being into resistance. Okay. So summation this morning, given the fact that the market certainly has factored in the interest rates being pushed back, and therefore obviously US equity market obviously is certainly buzzing with excitement, etc. Given the fact that interest rates have been pushed back, but in essence that is actually not a good sign from a fundamental perspective, given the fact that the economic data is so weak. So we seem to be back on that Kool-Aid trade or the QE trade, and we'll see exactly how that lasts. The economic data this week has been negative, especially out the FTSE, from a FTSE's perspective. The economic data, if I just go back and revise, and retail sales, that's not the number for the FTSE itself. The UK data, just to confirm, CIPS services came in at 53.3, estimated was 56, and the composite PMI came in at 53.3, and the estimate was 54.9. So certainly very bearish from my perspective. Okay, so economic data weak, that should certainly negate any euphoria over interest rate obviously being pushed back, etc., and easy monetary policy being maintained, and obviously that's helping the FTSE 100 this morning. Okay, the other story as well with regards to Glencore, rumours of Glencore being taken over, etc., pushed the shares in Hong Kong up 40%, until a statement was issued this morning stating that there's no reason for an increase in volume and activity in the share price due to the fact that there is no takeover at all. Okay, and there is no confirmation of a takeover, so therefore the FTSE obviously gave back its gains. Okay, so the FTSE gave back its gains. So let's bring up the FTSE 100 chart and give you an insight into the price action this morning. Okay, here we go. So let's try to look at a 5-minute chart, probably be better really. Okay, so the FTSE 100 gapped higher, obviously quite an impressive move here into the 6240 region. I went short given the Glencore news of rejection, and that obviously sent the stock, the FTSE itself, down to 6211, and before we continue this rally at present as we see. Okay, so bringing the market into perspective now on a weekly chart, as you can see here, we've negated this red candle, which is semi-bullish from technically speaking, but a lot of that move has been factored in now, given the sheer thrust higher. As you can see here, we are into resistance on the horizontal chart at 6250 level. If we do breach above, then 6280 certainly will be the cap. Given the fact that we've had weaker economic data and weaker UK data and weaker EU data, that will negate a lot of the bullishness from this euphoria over interest rate. Obviously being interest rate expectations being pushed back, thereby helping commodities, etc., move higher and so on and so forth. A lot of that has been factored in. As you can see here, we've moved from 6120 all the way up to 6260, so up 150 odd points. So from my perspective, all good news is now baked into this FTSE cake. Okay, now going to your 60-minute chart, the FTSE 100 perspective, again you have horizontal resistance in this zone at 6240 down up to 6285, so that's your zone. We also have a horizontal resistance here as well. Again, it's at the 6250 region. Okay, and that certainly is your zone that you're going to be operating within. Okay, from the FTSE 100's perspective. Now, looking at a 10-minute chart of the FTSE 100, we were putting in a potential topping tail. We have slightly pushed higher, even though the economic data has been weak, and that's mainly due to a potential thrust higher on the S&P 500 at present. You currently have the S&P trading at 19,622 region, which is very, very impressive. Okay, although the Dow is certainly into resistance. Okay, now 10-minute chart, going back, if we do push back and we certainly retrace here, which I'm expecting to, and I remain short the FTSE 100 around the 6250 region, I expect a thrust and a move back down to the 6175, where previous resistance equals support, and then we can reassess and understand what's going to happen next. At present, weaker economic data will certainly cause this euphoria rally to certainly dissipate. Okay. Now we can cross-reference the FTSE 100 with the volatility index. The volatility index again is coming into potential support from my perspective. As you can see there, we've had a bottoming tail, and we are into support. And you can see that also evident on the 60-minute chart as well. So that means it's bearish for the FTSE itself. So early warning sign. FTSE oil share, as you can see here, horizontal resistance. FTSE Euro Top 100, this has thrusted higher. Certainly needs to be given respect at this current moment in time. But given the fact that the euro is starting to rise, that may well be a factor, but certainly is pushed higher. And one could argue it's a neutral and potential move of thrust higher again. Okay, so given the fact that we've got lower lows and lower highs here, so using your fib retracement, you are onto that fib 61 and 75% resistance. FTSE 250, very impressive move, has thrusted higher, as you can see here. And the weak economic data this morning certainly will help the FTSE 250, given the fact that the sterling will start to push lower. Okay, but you are coming into resistance on the FTSE 250. So the FTSE 250 being into resistance obviously means that the FTSE 100 is into resistance, and as you can see here, we are into this important zone at 17,100, which we're not too far away from at present, and that should certainly act as potential resistance for the FTSE 100 too. Okay, in terms of oil, the oil price itself, we have retraced quite powerfully given the fact that they pivot low on the 2nd of October, but we are now coming into resistance. If we take the pivot high, take it to the pivot low, and you are coming into that 75% fib resistance. There hasn't been any overwhelming move higher on oil. Why? Because, I mean, look at it from a fundamental perspective, even though you have weaker jobs report, it means obviously weaker disposable income and so on and so forth, and that obviously will result into weaker oil prices as well, given the fact that lack of demand. How far can a weaker dollar lift the price of oil? That is dependent upon fundamental strength, i.e. organic growth or growth in general, obviously whether it be from a job sector, whether it be from gross domestic product, etc. So it's very important. Okay, so again into fib 75%. The other chart that is quite important at present, especially for the FTSE 100, is a chart of copper. So I'll bring that up for you. Copper itself today, as you can see, is still bearish. 60-minute chart at the moment, we are obviously bearish. Again, use your fib retracement, take the pivot high, take the pivot low, and you are into that fib 75% resistance. And the 10-minute chart has obviously stalled and made a triple top as well, so therefore it's bearish for copper, which means that it's bearish for the FTSE 100 from my perspective at present. Okie dokie. The gold price of gold again has been meandering and certainly is certainly holding the resistance zone, given the fact that oil or US dollar itself certainly seems to have potentially found a base. Okay, the Aussie USD again, if you look at it from a 4-hour chart perspective, you are coming into resistance into that 200 MA, and you have horizontal resistance as well. The NZDUSD, if I just bring up a bigger, excuse me. Okay, so a 4-hour chart at the moment certainly has thrust higher very, very impressively, but we are coming into that pivot R3 resistance, which does actually technically act as a resistance zone. Okay, and we are into previous support equals resistance here as well. So it's quite an interesting zone, the Kiwi, and certainly something to keep an eye out for. And again, certainly arguing for a potential thrust or a move lower. The actual FTSE 350 insurance sector, you've got beverages, you've got telecoms. Telecoms themselves certainly are coming into resistance, as you can see here. From the telecom sector, certainly has thrusted higher. The pharmaceuticals at the moment, if I look at a 60-minute chart, again you are into that 200 MA and gap fill above as well, resistance. The 60-minute chart of the banking sector clearly shows a potential double top. Okay. the retail sector at the moment. Bring that up for you. Okay, so very impressive move, but again we are into resistance, so as you can see here. So certainly a resistance zone on the actual retail sector as well. So again, that means resistance for the FTSE 100. The mining sector certainly has pushed higher into pivot R3, and again, certainly one would argue it's certainly oversold. And as you can see, it failed at 200 MA, which means that previous support equals resistance, and 200 MA resistance equals the mining sector certainly is into resistance, and therefore the FTSE is as well. So again, all my analysis, oil and gas, again, we have thrust higher. We have pivot R3 resistance now, and one would certainly argue from that perspective we are into resistance. So again, horizontal resistance is very, very near. Okay, with regard, and also given the fact that we've certainly overextended, given the fact that we are into pivot R3. Which means it's certainly overbought. Okay, so all my analysis and my variables certainly are showing that the FTSE 100 certainly wants to push lower and propel lower. So my bias remains bearish at the current juncture, especially with the weak economic data that we've seen this morning. Okay, that's a wrap. Take care and safe trading. Again, be sure to visit cfds.com for your trading needs. Goodbye.